Hi, my name is Joshua Mahony, Chief Market Analyst at Scope Markets. Let's look at the week ahead from an earnings perspective with a whole host of big tech names in particular coming to the fore. We're going to see the likes of Microsoft, Google, Meta, Tesla, ExxonMobil and Chevron also bringing an oil slant to proceedings. And so it's going to be a massive week, some would say. It could be the biggest week of earnings season, and certainly given the movements we've seen within equity markets of late, this is a week that could really make or break things because there have been concerns around demand on the tech side of things. And so the question mark is whether they can be allayed and people can move onward an optimistic outlook, or whether that is going to be exacerbated and we see further declines for equity markets. I'm going to pick through three of the key markets to be looking out for, equities to be looking out for, and we'll show you the charts and show you how they set up as we lead into these key earnings announcements. The first of these will come on Tuesday, and that is the latest earnings from Visa. We can see here that the expectation from an earnings perspective is 244, slightly higher from the last quarter, and revenues up to 862, although that's a tick lower from the prior quarter. What's notable here is that we've seen outperformance versus expectations time and time again. The last 2 years, every single quarter here shows that it has beat on expectations. And ultimately, what we're seeing for the likes of Visa is a company that should essentially track consumer spending habits over in the US. We have seen continued strength, 4% growth on retail sales year on year was the last figure for the US. So it's a good chance that that should provide the basis for further upside in terms of Visa revenues and earnings. Looking out into the back end of the year, you can see here sort of 244, 246, 262, 272 in terms of earnings per share. So the expectation is that we will continue to see growth over the course of the year, which should provide the basis for optimism for this company. And certainly if we look at the share price, let me just quickly grab that for you. So here's the chart. By and large, we're looking at a market that has been a very strong performer over a number of months. Let me just go into the weekly time frame first and foremost. You can see here that since those lows in October 2022, we've been really staging a massive rally here for the shares, gaining ground to the extent of, here we go, all the way up to the top there, 65, 66% gain. Up into the peak that we saw in mid-March. But we've been heading lower since, by and large. That is a move in line with market sentiment, market expectations, sentiment really. And that decline in terms of market sentiment is undoubtedly having an impact on this company, much like many of their counterparts. But the expectation is that we're going to see continued strength in terms of the US consumer. The expectation also is that we're expecting to see further upside in terms of earnings per share over the course of the year. Now, what's notable coming into this report is that markets have looked ahead towards, and I've covered this in the sort of wider overview for earnings season. Markets are pricing in a slowdown in terms of the growth for those tech names, but a ramp up in terms of growth for the rest of the US market. And that really is going to be reliant also on monetary policy becoming supportive. As long as monetary policy sort of easing or rate cuts gets pushed further and further into the future, that could delay that rebound in terms of those non-tech names, essentially. And so there's question marks as to whether those tech names drop off in terms of growth, but we don't necessarily see that picked up from elsewhere. This is going to be a really interesting company to watch, but ultimately you're looking at a company that is in rude health, has been on a rampant rally over recent months. And so the decline that we're seeing at the moment, many will see as a potential opportunity. Do we get back in towards this sort of trend line, back in your 260 kind of area? Time will tell, but I think this decline could be another pullback akin to the moves we've seen in the past, and each one resolves with another move towards the upside. So short term, we're seeing downside, but I think arguably this looks primed for another leg higher before long. And ultimately, these earnings should give the company an opportunity to showcase the strength of their business. Question marks really will be on the future outlook. How do they see things shaping up for the rest of the year? And certainly with monetary policy shifting somewhat, that's going to be key going forward. Next, I wanted to bring up the outlook for Microsoft, and this company is announcing on Thursday the 25th. And ultimately, you're looking at a company that has really benefited from sentiment around AI. The question mark here is, what is the financial implications of it? Are we going to see the growth of their AI related offering providing significant boost to the bottom line, or are we not? And is this just bluster? So the problem that you're seeing for many of these tech names is that we have seen so much in terms of expectation that they really have to deliver in terms of actual earnings, in actual financial benefits. Are we going to see that? Well, look, in terms of expectations, we expect to see a decline in terms of quarter on quarter earnings per share, 281. But if you look in terms of the change from the same time on the prior year, 245 up to 281, that's significant year-on-year growth. In terms of revenues, a similar kind of decline expected, 60.84 billion expected in terms of revenues, but that's still significantly higher than the 52.8 seen a year ago. But certainly the outlook for AI and the cloud business will be particularly important for this company going forward. In terms of the share price, certainly this hasn't necessarily declined to the same extent that we have been seeing for some of the other tech names, most notably the likes of Nvidia, the likes of Tesla have been really in the firing line of late. But what's notable here in terms of this Microsoft share is that the declines that we've been seeing have not broken us out of the near-term trend. The pullback here looks like it's dropping down into a retracement. That didn't get drawn on properly. You can see here that we've got this retracement in play. I'll draw up to the point here and extend it out because it doesn't want me to do otherwise. Let's just extend out this bit down here. So you can see we're dropping down towards that 76.4 fib at 405. That to me looks like an area where I think we're going to see the bulls come back in. If we break below the 397, there's a good chance that we're going to roll over into a wider retracement phase. But as you can see here, since the lows in October, we see a rally. This is essentially a very shallow retracement. Next rally, shallow retracement. We're coming into a deep retracement here, but unless we break the 397, you've got a very established bullish trend here for Microsoft. And, is this a top? Is this the beginning of something like what we've seen in 2022? Well, we haven't seen the sign to say so quite yet. So that 397 is going to be absolutely key moving forward. And until that level breaks, you're looking at a market that looks like it could just continue in this recent vein. Notable that we have broken through this trendline support here. So is that a precursor to a wider decline for this stock? Well, ultimately, the trend is your friend. The trend does still remain in play despite that early warning sign that comes with a breakthrough trendline support. The key thing here, though, is are we going to break that 397 support level? Until that happens, I wouldn't be surprised to see the bulls step in soon enough for this massive tech name. In terms of the PE ratio, let's just look out in terms of, because we've seen such significant gains. Where are we now? Well, we are at levels, 38, 39 that in the past have been relatively toppy. And so the question mark is whether the earnings are going to come out to justify this current level. We need to see that earnings growth, strong earnings growth required to justify where we are in terms of a price to earnings ratio. So certainly one to look out for, especially given the jitters that we're seeing within some of the big tech names at the moment. And then finally, I wanted to touch on Google, a similar kind of theme to Microsoft in many ways, with the focus on AI, a focus on the cloud business, also advertising significant. It's notable, of course, that people are speculating that we could see some drop off in terms of user numbers for Google search engine, given the fact that we're now seeing the likes of ChatGPT coming to the fore. So let's see exactly how things play out from that perspective. In terms of earnings, well, you can see that the expectation is that they're going to ramp up towards the back end of this year, drop off compared to the fourth quarter of 2023, expectations of 151 on the earnings per share figure, which would be well up on the same time last year, which was 117. In terms of the revenues, 78.71, again, a decline in terms of the quarter-on-quarter figure, given the 86.31 figure for the fourth quarter. But again, a gain when you're looking on a year-on-year basis, which I think is probably going to be most pertinent, because if you look on the prior time around, we saw a similar kind of drop in Q1 compared to Q4, and then it builds from there. So as you can see, it is relatively cyclical in nature, where it builds towards the back end of the year, and generally the Q4 is your strongest quarter for Google in terms of revenues and earnings. In terms of the charts, let's just quickly get that up for you. There we go. And so essentially what we're looking at here is, again, a company that's done very well despite some jitters within the tech sector. In terms of price to earnings ratio, well, we haven't necessarily got to levels that are deemed stretched by historical standards, so I wouldn't necessarily worry too much from that perspective. Certainly earnings managing to keep up with some of the gains that we're seeing in the stock. In terms of the share price, the daily time frame shows you this sort of staggered move towards the upside. The declines generally provide us with opportunities, but it's notable that it's not necessarily just a single pattern that we're seeing here. You also see retracements into deeper pullbacks. So for example, we've seen it here where you're seeing higher highs, higher lows. We break down through the swing line, we retrace into the wider move here. You've seen it once again here where you've seen a breakdown through the swing low, but then you retrace that wider move. So that is notable given the fact that we're pulling back at the moment. And if we broke in through the support level here, which is at 149.6, then you'd be looking for a wider retracement to come into play, which would be a retracement of the rally up from 130. So maybe a 140s, 145s kind of area, but really it comes down to whether we break that 150 mark or not here for Alphabet. But things that holding up at the moment, it's a similar kind of picture in terms of Alphabet and Microsoft. If I just get a deep retracement, I think quite frankly this is a 50%, but it might be deep. There you go. It is actually a 61.8. Okay, so we've come into a 61.8. We're starting to regain some ground. Will these earnings provide the basis for that next move back up to 160 to recover the relatively moderate losses that we have been seeing of late? Certainly some question marks around the tech sector have been abound recently. The more likely stocks to see volatility and weakness would be semiconductors, and in particular, those names that have seen rampant gains over the course of the last year or so. Certainly the likes of ARM Holdings, the likes of NVIDIA, really have been seeing significant volatility because they've seen such gains based around that AI growth. And if that starts to falter, then they've got a bigger drop to come into play. But certainly the likes of Alphabet, the likes of Amazon, the likes of Microsoft, they've all done well prior to AI even really coming into play. And so the degree to which they're likely to decline, it isn't necessarily going to be as significant. But certainly a big week ahead in terms of earnings. Visa gives you that outlook in terms of US consumer spending. And then you've got the likes of Microsoft and Alphabet that really should move the markets, given the massive weighting and the massive size of these big tech names, providing hopefully the basis for a recovery following a period of jitters that have seen people really concerned about how these big tech names, most notably NVIDIA and Tesla, could provide a drag on the market following years of really relying on tech to drive markets higher.